So, now our Turkish friends just left us, which is good because I was trying to say something in Turkish, which I'm still doing. So, iyi günler. This is supposed to mean hello, or good day, welcome. So, iyi günler to this special presentation of the Make It Fund, which Marvin so kindly introduced. I don't know about you, but this is my first time to Istanbul. And I have to say, what an amazing city it is. You know, a bridge between the East and the West, melting point of cultures, and a passageway between the past and the future. And this city, as we have also learned yesterday, has seen such a tremendous amount of change and upheavals in its history, in the Byzantine time and the Ottoman time. And as I intend to talk about change also, but change to our financial system, necessary change to our financial system, I deem Istanbul to be a very fitting and great place to do so. So, Marvin, Marvin, thank you very much for choosing Istanbul as this spring's venue. I think it's a fascinating place to be and very fitting also. So the main theme, let's see if this works. It does perfectly. So the main theme of this meetup is investing in difficult times. And in difficult times we are. So let's talk about debt. I had a quick look and had a look at the world debt levels. So the total amount of debt, private debt and public debt together in the world is, drum rolls, $305 trillion. Now a question to you. What do you think is the global GDP, the global gross domestic product, or the global sales or turnover of planet Earth? Any ideas?
2 trillion?
Not bad. More. Anyhow, I didn't know it either. So I asked my good friend ChatGPT, and ChatGPT came up with a figure between 85 and 104 trillion US dollars. So whatever the final figure is, we're still talking about at least a 3x amount that debt is higher than our world GDP. So how on earth is this debt going to be paid back? If I was looking at this world as a company and an investor, would I invest into a company that has 3 times more debt than it has turnover or sales? No, certainly not. That's the debt part. Now let's look at our currencies. And we've heard a lot about the Turkish lira and how much it has lost in value. Let's talk about the global world reserve currency, the US dollar. And the US dollar has lost in purchasing power about 96 to 97% between 1913, the day that the year that the Federal Reserve was set up, and about 5 years ago. So that means that for a good that you paid $1 for in 1913, for the same good, same ice cream, same shoelace, whatever, you would have to pay $30 today. So I ask you, is this sustainable? Is this financial system sustainable? I don't think so. So we need something new. And I think a new system needs to be centered around blockchain technology. We can't change, and Albert Einstein comes to mind here, we can't change a given system with the same set of thought that brought us into the system. So we need something new. And Satoshi Nakamoto, whoever that is, gave us a glimpse of what we could use as a base for this upheaval, for this change to our financial system. I believe this to be blockchain technology. So in October 2008, the first white paper of Bitcoin appeared in a very obscure group of cryptography guys. And just 3 months later, in January 2009, Satoshi Nakamoto minted the very first block of Bitcoin, block 0. What very few people know is that we have a secret, or he has placed, or it has placed, whatever that is, Satoshi Nakamoto has placed a secret message into that block 0, which reads like that. The Times, 3 January 2009, Chancellor on brink of second bailout for banks. So we are at the very heart of the global financial crisis, the GFC, 2007 until 2009. He's quoting the Times, British newspaper, so he's referring to the UK. So we had also major bank bailouts in the UK. I know of 4, so there was the Royal Bank of Scotland, now NatWest. There was Lloyd's of London, Northern Rock, and a third one, I think, which I forgot the name. It's not really that well now. But 4 huge banks have been bailed out by the government with tax money. And Bitcoin itself was created as an alternative to this financial system, or as a base layer for a new financial system. So what we at Make It started advising people about 5 years ago to invest between 1% and 5% of assets into cryptocurrencies. 1% and 5% because it is very volatile, it is dangerous, it is unknown, we don't know where this leads to, but this seems to be a good percentage of a total asset pool. So the question is how to go about this. You can exchange money, put that on an exchange, get some stable coins, buy Bitcoin, buy Ethereum, whatever, leave that at an exchange and hope for the best. Because what we've heard, excuse me, is that billions upon billions have been lost due to hacks and exploits on exchanges. So do you want to leave your assets on those exchanges? I don't know. A much better option is buying those assets on an exchange and putting them in a cold wallet, such as a Trezor or a Ledger. Don't know whether you have experience with that. That is a much safer option because you're not vulnerable to any external exploits, but you are vulnerable to your own mistakes. You have your private keys. Now what happens when you lose those private keys? The money's lost forever. And billions upon billions have been lost because people did not have access to their own private keys anymore. A good example, I don't know whether you know that, but it's an interesting example, is Matthew Mellon, of a pretty well-known US family, who had amassed $500 million worth of XRP, the coin behind the Ripple system. And he died, totally unexpectedly. I'm not getting into the details of his deaths, but the fact is he seems to be dead. He left 2 small children and a wife, and $500 million wealth. Problem is, they didn't have access to the private key. So those $500 million, they will never have access to. So this is also a reason why we created the fund. We wanted to create a simple and easy way to invest into this very exciting new asset class without running into the issues with being hacked, exploited, losing your private keys, what have you. The fund has been working well, doing exactly what it set out to do. Performance speaks for itself. When you compare it to other asset classes like NASDAQ, so tech investments, gold, whatever, it's always a 5x until 7x. In the 3 years that the fund has been in operation, and that during a time that cryptocurrencies went through, well, a roller coaster to say the least. So we're pleased with this development, and we have created a vehicle that is easy to invest in once you get through threshold of whatever you have to do to get into a regulated fund. Marvin can tell you a lot more about that. But once you qualify for an investment, you're in. You're good to invest, and you're good to extract your money also back out of the fund, which is not natural at all. I remember the case of one of our partners who dealt with a bank that I'm not going to name, and where he had some crypto gains, and he wanted to withdraw those gains in fiat. It was a 6-digit sum in fiat in a European currency, and he wanted just to withdraw his own money to another account. And the bank said, no, we can't do that, sir, I'm sorry. And he said, why? Because we don't know you. He said, yes, you do know me. The funds were here. I generated income while I was at your bank, and I just want to withdraw my money, please. And I said, no. So, because he was dealing with crypto, and he was exchanging it into fiat. And he had to hire a bunch of very, very expensive British lawyers to sue that bank. And, he got his money out, and he won't touch that bank with 10 foot full with any time anymore. But I'm just telling you, once you're in the Make It Fund, you can get in and out. So let's have a quick look at how we set up the fund, how we created this, and what was the set of mind behind it. So we're not just investing in Bitcoin and just leaving it there. We wanted to create something that is safer, less volatile, but still participating in this entire market, or even outperforming it. So we're going to have, I'm not going to read all that. You know that chap. He introduced his role into this. You know me by now. You know Kenneth and you know Dominic. Kenneth is from Switzerland, from Zurich, Switzerland, and Dominic. Both of them have been with cryptocurrencies basically since the inflection point. So they are very, very knowledgeable and have amazing contacts in this world. So the structure, I'm not going to bore you with that. If you ever invested with Crown Financial, you know this fund structure. It's a dual country setup in Singapore and in New Zealand, which creates certain tax advantages to people that can use it, let's say it that way. Jane, any questions in between, or you were just preparing to ask something? But okay, good. So the objective, I already touched on that. We wanted to create a vehicle where you can safely invest into the whole cryptocurrency ecosphere. Not just one currency or two currency, not just one part of it, the whole thing, apart from mining. If you want to invest in mining, may I refer you to Rolf, because he is the person who knows most about that. So we're not doing mining, but everything else. So we have created an approach which we call the 5-pillar approach. So this is what the fund is doing. We invest about 50% in the biggest, most prominent currencies, coins, tokens that are under constant review. Obviously, the biggest part is Bitcoin, and the second biggest part is Ethereum, because they together have like 60% market share. But there are others also. Then, to smooth things out, we are investing, we are also trading in the futures market, long and short, but just with 15%. We are providing liquidity to certain markets. We are investing in DeFi, and we are also a venture capital fund. Let's have a look at all those in a bit more detail, shall we? Shall we?
Try again.
Huh? Lost it. worked so well.
Go for it. You're moving. You just move.
Yeah, I got it. No. Okay. So the 50 biggest coins. So have a good look. Anybody who can tell me the names behind all those logos gets a very nice drink tonight. It doesn't mean that we invest currently in all of those, but we have quite a lot of these in the portfolio. As I said, this changes. We see some new things that we get into. We kick others out. So this is 50% of the fund is invested in these. These are long-term, long-only investments that we just stick there. Trading, basically to reduce volatility of the whole fund. What we do is we have two different strategies. One is actually buy low, sell high, which is easy, and buy back lower to sell again higher, or to actually buy short options on the market. We're hardly ever going long here. This is to reduce volatility and reduce the overall risk. This is an area that we keep on elaborating and working on and making it better day by day. This is very interesting and creates a substantial income to the fund, which keeps on providing liquidity to the fund regardless of what happens to the cryptocurrency markets. Then we have DeFi, decentralized finance. So this is basically Wall Street in a decentralized world. Very interesting. It covers everything that we know in the financial world, from investing in derivatives, from buying, selling, from providing insurance, lending, borrowing. It's the whole financial system on blockchains. And the fifth and last point is seed funding. Currently, the fund does not have a single venture capital investment. We have sold ours that we were invested in. The venture capital scene in the blockchain space has seen such a tremendous inflow of incredible amounts of money that deals are not interesting anymore currently for us. We need to see two things. Value, or three things. A fantastic management team, value in the proposition, and an easy way out for us. So we're not a venture capital fund. A typical venture capital fund, as we've also learned yesterday, stays invested for 7 years, 10 years, whatever. This is not our aim. So if we invest into an early stage situation, we need to have an exit within the next 12 months, meaning tokens and equity. So we would sell the tokens, keep the equity for the long term, but we would recuperate our initial investment through the sale of the tokens. So the performance we've just seen a bit. These are, by the way, figures from the 31st of March. I just checked this morning. The fund is up another 4.5% since then. Yes, we have some graphics where you see the performance against other benchmarks. Here's without the benchmarks, but what you can see here, although the fund has done pretty well, question that I'm being asked, is it too late to invest? You know, have we missed the boat? And I can only say, look, where the fund was already, where it is right now, we haven't had a tremendous the first quarter was fantastic. It was the second best first quarter for the fund in history. But there's so much more to come. There is so much more to come. The whole blockchain space, I've just seen the latest report of one of the biggest VC funds, which is the one from Andreessen Horowitz, A16Z, and they still see the blockchain space, or compare it to the internet space of about 1998. So we haven't even started yet. So is it too late to invest? No way. So these are monthly performances. This is the information we provide in total transparency always. These are maximum drawdowns where you can see where we compare the fund against Bitcoin in this case, where we can demonstrate that the fund is less volatile, as such less risky. So to boil it all together, why would anyone want to invest into Make It? Just to have access to this asset class in a as risk-free as possible environment, and a very easy environment. Do you need any knowledge? No, not at all. You just invest US dollars or New Zealand dollars and whatever, and get that currency back out when you want to have it back. Has tax advantages, as I alluded to, depends on every investor, whether you can profit from those. And it is exactly that what we set out 3 years ago when we started the fund. It's just the vehicle that I was looking for in my other business, my money management business, to invest also my own family's and other mandates that I have capital into the cryptocurrency space. Mind you, not more than 1 or maximum 5%, depending on the risk appetite that everybody has. But everybody should have something in this space if you want to diversify your assets. So this is it. I'm at the end of this presentation. I'm very happy to take any questions, should you have any.
When someone asks a question, will you repeat the question? Because then it will be recorded on you.
Excuse me?
When someone asks a question, repeat the question.
I will. Yes, now I got it. Thank you. Absolutely.
I got a question.
Yeah.
So what do you see as the future value of non-fungible tokens?
So the future value of non-tangible tangible fungible tokens.
NFTs.
Thank you. NFTs. That's why you've got acronyms, don't you? We've seen an amazing rise of NFTs. We've seen all these pixelated pictures selling for hundreds of thousands. The fund never got involved at that stage because we just thought this were ludicrous prices and rather crazy. And we're happy that we didn't do so. But that was not the question. That was the history of NFTs. What is the future? I think it has a tremendous future, an absolutely mind-boggling future. Few examples. Let's take the gaming world. Web3 games. There have been 717 Web3 games developed in 2022. We had in-game spending of over $60 billion in gaming. So people are playing a free game and they're spending on certain assets, a new sword, what have you, better shoes to run. And that amounted to $60 billion last year. Totally amazing. Now, so gaming's getting more and more and more important. Now, if you have your avatar, your little Philip with great shoes and a sword, and you're saying, oh, this Philip is working fantastic in this game. I would like to passport this identity to another game. Can I do that? No, and yes with NFTs. And yes, in a Web3 environment, in a Web3 game. You can take your Philip with great shoes and a sword to another game and play there, which is fantastic. So this will be very big for the gaming industry and will revolutionize that. Then you've got so many ways to use NFTs. Talk political campaigns or the whole charity world where you could sell or provide people with an NFT once they donated certain amounts to a cause, a good cause, hopefully. And then they could take that NFT and put it on their homepage and say, look, here, this is what I'm doing. I'm a very philanthropic person. So, I mean, you can become very creative in the NFT space. So, cut a long story short, Rolf, I see a tremendous potential for NFTs, yes. Did that answer your question? Okay, great.
The Make It Fund currently is a very liquid fund. Do you want to perhaps explain the redemption process?
Absolutely. So that was a question with regard to the redemption process. We had, in principle, a redemption time of 3 months in the beginning when we set out. What we have experienced in those 3 years, we had the colossal amount of not 1 but 2 redemptions in the whole fund in 3 years, so there's basically nothing, but we gained valuable experiences. And the experience is that we don't need 3 months from the owner of the units. That's what we call what you get when you invest in the fund. You get units in the fund, measurable units. So once you sell them and tell us, yes, I want to sell them, how long does it take from that decision that has been communicated to us until you have the money on your bank account in US dollars, euros, or what have you? And the absolute maximum time was 2 weeks. And the most time that we used was between banks. Because obviously there's a process. We have to sell cryptocurrencies into stablecoins, move those stablecoins to a regulated exchange. We are mostly using one in Australia right now. Transfer those funds from stablecoins into the fiat currency that is wished and intended, transfer that from there to a bank account. That took altogether a maximum of 10 business days, 2 weeks. We've done it in 1 week. So that's the reality. We would still say, well, yeah, that's the reality.
How do you manage between exchange funds and cold storage in the fund?
Okay, very, very good question. We have most of the first pillar. So excuse me, I just need a little. Can you pass me that water there, Rob? Thank you. Thank you.
Will you repeat the question, please?
Could you say the question again, please? Just.
How do you manage funds
Yes.
between exchange?
Right. So when we trade, obviously you need to have certain assets on exchanges. So here's the question, which exchanges do we choose? And we work only with the biggest, if not only regulated exchanges. So we work with Kraken or so, if we have to have those coins on exchanges. Otherwise, we have them in cold wallets. We use ledgers. These ledgers are in bank vaults in Switzerland somewhere. And access codes are split, so nobody can take off. It's a well thought out system. So, but when we work with the money, for instance, when we work in the liquidity provision space, we could go to one exchange and say, okay, take 10 Bitcoin and give us USDT, USDC, so a stable coin, excuse me. We could then provide liquidity to a market in this stable coin. By the way, we would have to pay, obviously, to get these. We let the Bitcoin as collateral, but we know that the exchange will put our Bitcoin into a cold wallet that they have. So we would just work with basically the loan that we've been provided, for which we still only pay about 1% a year, by the way, which is a great way to get into liquidity and let it work for you. So if we have to keep assets on an exchange, it will be on a very reputable one and one that has never been hacked before. Or we have it in cold storage, which are in these safe depository boxes.
Do you comment on assets under management?
No. Please ask me later. I can, but we're on camera.
And then the second question, as someone who is not very familiar with the space,
Right.
can you help us or me to improve or get a better understanding on if we dive into the whole cryptocurrency space, to what extent are all these cryptocurrencies correlated to one another?
Okay, that is a good question. They are correlated to one another.
Can I imagine your work as a fund manager as to that you are looking for the 1 out of 100 who is currently outperforming the rest of the pack? Or?
No, as we are very well connected in the whole scene, we have insights into developments. And we can invest early into companies, projects, tokens, coins that have a lot of future ahead of them. Are we looking for those unicorns in that space? No, because that is too risky. First and foremost, our job is to safeguard your money. We're not gambling, so also when we're trading, going long and short, the maximum leverage we take is 3%. We could take 100. Not doing that. We are not gamblers at all. So the most important point is to safeguard capital invested, and so we won't go out there and invest into any projects on a whim that we don't know things that perhaps the market doesn't know, because we know the people that run the project and we know exactly what's happening there. So, but we are not chasing it. It's a nice add-on once we have the information that we use it, but we're not chasing it. Did this answer that question? But it is all very correlated, obviously, yes. But then again, you have within the cryptocurrency market, you have also changes. Let's talk about Bitcoin. Bitcoin currently has, I think, 45% market dominance. So we've got, I don't know, 15,000 cryptocurrencies out there, 20,000 by now. I don't know. So Bitcoin has, let's say, 50% market share. But this was up to 80%, and it was down to 30%. So is it correlated? Yes, but it fluctuates within itself. So this is why we're not investing only in one. This is why we like to spread our risk, diversify into many projects, and then create an average return, which is still very, very satisfactory, and most of the times, 80, if not 90% of the time, better than the leading assets like Bitcoin. We can't outperform Bitcoin every time because we are diversified, but you're having less risk, but we are outperforming it. And I did some analysis on that between 85 and 90% of the time. But when Bitcoin, for instance, rises meteorically, as it has in the first 3 months right now, the fund automatically will lag a bit behind because we also have other assets that do not perform that well. But in the end, I think we have created a solution that captures the entire market and the entire development of the market, as we've seen with the fund performance, with a lot less risk. It's still risky. It's cryptocurrencies after all. It's still the wild, wild west out there. But this is as safe as you can get.
How do you protect your investors? Like last year, there was a huge drop in crypto. Like most of my stuff out, and a lot of people I know. How do you protect your investors from that? Because you can't really see that coming. That happened overnight. And again, with Solana, that decoupled.
Very, very good question. How do we protect investors from that big drop that we've seen from certain projects decoupling? Solana, by the way, is up 125% in the first quarter, so catching back on, by the way. We have Solana under fund also. Well, we can't protect investors against all the losses, or all the volatility, paper losses that exist and happen, especially in this market. If we were perfectly hedged as a hedge fund, basically the fund wouldn't move anywhere, would it? So you have to decide on where we're going here with this market. And as we think that the market is going to experience tremendous growth over the next many years, I can go into more detail what we think what will happen in the more immediate future. But so what we want to be definitely long this market, and we want to reduce the volatility through our trading structures. So if we have some shorts in the market while the market is tanking, obviously this will happen. Will help the overall volatility and overall performance. But is it 100%? No. Obviously, our investors also, on paper at least, lost money, as we've seen from the chart. We were much higher. We came back, crashed down also. Not as much as the market, but nevertheless, we crashed down. But we came back, and we're always thinking about hedging even more, but then the performance will be even less. Sometimes it will be more, and where's the how do you limit gambling and you know, taking care of funds? So we have to take certain decisions, and our main decision is that we are long in this market for the long term, and we will experience paper losses. But they are paper losses. As long as you don't realize them, I think in 10 years' time you won't recognize those figures anymore. Right?
Do you ever worry if the space is just going to go away?
Excuse me?
Do you worry that the space will just go away?
Do I worry if the spice will go away? No, I don't. Actually, when I
Sufficiently hamstrung by government to not...
very good question. Will the government impede, forbid cryptocurrencies? It is a very interesting question, and I mean, we don't have a lot of history, do we? But we have history since, as we learned, the first block was minted in January 2009. And what we've seen since then is that crypto has been called dead at least 450 times in the press. And there's one page that tracks that, which is quite amusing. Now, let's look at the Chinese, for instance. The Chinese completely outlawed cryptocurrency trading, ownership of cryptocurrency, and crypto mining in 2011. Now, why is this significant? It is significant because China had, at that point in time, 65 to 70% of the world's hash rate, meaning mining powers, meaning 65 to 75% of the whole Bitcoin network were validated in China. And they completely outlawed that. Why did they do that? And what were the consequences? Well, the consequences, to take that first, was that all that mining industry moved somewhere else, where it was treated better. To the US, to other countries, Iceland, wherever we have also alternative sources of power. Now, rather recently, the Chinese have absolutely changed their stance towards cryptocurrencies. Now, you might ask yourself, what happened? Well, in between, they have silently established the EU1, their CBDC, their central bank digital currency, in the market. They already had the first 1 billion yuan transaction in the EU1. Once they reached that, they changed their whole stance towards their industry. So they created a state-owned NFT company, by the way, the Chinese NFT company. They're getting big into NFTs. They concentrate now their crypto efforts on Hong Kong, allowing in Hong Kong, or Hong Kong to become a crypto hub, allowing for banks in Hong Kong to service crypto companies, which is absolutely brand new. So they did a 180-degree turn. Now, what's happening in the US? The US has, in a matter of 2 weeks, closed down 3 banks. 2 of those were the 2 most important banks and fiat rails to the cryptocurrency industry in the US. They just closed it down. So what I see here is we're seeing a similar playbook than the one that the Chinese applied. So what is the US trying to do? It's just my guess. My guess will be they would want to establish their own CBDC, central bank digital currency, their own electronic digital US dollars. Let's not get into the philosophical meaning of that, because that would take ages. But let's say they want to do that, and I'm very sure they will, and I'm very sure they will even announce it this year with a concrete plan and timing. So they're trying to stifle the crypto industry in the US currently, similar to what the Chinese have been doing. So, but I think once the CBDC, the e-dollar, has been established, or the digital dollar has been established in the US will reopen as the Chinese just did. Because it's crazy. Think about it. There are 45 million people in the US between the age of 18 and 36 that own cryptocurrencies. That's a lot of votes. And if you, on camera, I'm not saying that why, if you make them unhappy, they won't vote for you. So it's a fine line also for politicians in the US on how to pursue this. On the one hand, they want to establish their CBDC, and they will. On the other hand, cryptocurrencies and blockchain is the future of the financial system, as we've seen. And they don't want to have that development and the whole research and development part of the industry leave the country and move to now Hong Kong, or move to Malta, which is what we heard before, or move to other countries. The European Union just introduced a new regulatory framework, which is very pro-crypto. So people are coming to Europe from the US developers. And is this sustainable? No, they don't want that. Can they outlaw crypto worldwide? No. Because we are not in a centralized world anymore. We are in a decentralized world. There are thousands, tens of thousands of servers where all these bitcoins, blockchains have been and are safely and securely stored. So you can shut them down in one country and another country, but we have 250 other countries. So as long as we don't have a world government, and the world government shuts down all computers on this planet, it won't be shut down. So am I afraid that that will happen? Nah. No.
I have one more.
Sure.
It's more a political question. I don't know what you just said. So do you think that's related to U.S. decision to charge Binance and CZ with pretty solid criminal charges for money laundering? And how do you think that will influence the whole crypto world?
Okay, interesting question. The question was what the motivation was behind, for instance, charging Binance as the world's biggest cryptocurrency exchange and its founder CZ with criminal charges. Well, I don't know the intricacies of what he has done and what he has not done. I just know that the CZ or his people published an answer to those allegations within 24 hours, which completely satisfied my curiosity and interest. Nevertheless, this is just part of attacking crypto as a whole. This is part of what the Chinese playbook. The Americans play it differently. They attack exchanges. Kraken had to pay $30 million because they violated a certain rule, because somebody called Ethereum a security and somebody else called it a commodity, and I don't know why Kraken paid $30 million. They paid $30 million, and now they're all good. It seems nobody really knows what they're doing. It seems to me the government is, or some people there are creating, to use a crypto term, FUD, fear, uncertainty, and doubt, to clear the way for their own digital currency. Once that is established, boom, the others may come back, same as we've seen in China. So is it a personal vendetta against CZ? Could be. They have also done the same thing with Coinbase. What did Coinbase do? Bravo, yesterday they counter-sued the SEC, which is brave, I'd say. But it's, something has to happen. This is kind of ridiculous. Just have a look at the European framework, but they just established for crypto. Copy it, and we're all good. Did that answer the question? Okay, great.
Bear in mind that, just to add to that, it was the time of greatest threat that the digital currencies, Bitcoin, Ethereum, has actually gone up. So while these are not good results for the exchanges, that hasn't significantly impacted the investor appetite in that area. Bitcoin hit $30,000+ after the Binance issues came out, after Coinbase was really served with the Wells notice. So it is proving to be quite a resilient currency. So,
Yeah.
I think we're going to leave it at
One more?
Sorry?
One more.
Sure.
So you mentioned about the China digital currencies become future. It's already under development. Is it under your 20 top currencies?
No, not at all. Not at all.
And do you have Chinese investors at this moment?
Do we have Chinese investors? No, we don't.
No, we don't.
No.
Not yet.
Not yet. Okay.
There are significant KYC challenges in bringing on mainland Chinese investors.
Yes.
Or
So
yeah,
this
I
is
mean, Chinese investors, not necessarily to them, non-Chinese, so it can be other Chinese overseas and stuff.
Well, I'm an investor in the fund as well. So.
So yes, we do have Chinese investors.
okay. Yes, you have to, obviously Marvin's firms are regulated in New Zealand, so we have to play by those rules with regard to KYC, near customer, with regard to money laundering, AML, with regard to the counter-terrorism threat financing. It's probably, yeah.
But I think to answer the question, central bank digital currencies are largely a stablecoin type of alternative. So you're not going to see a lot of volatility in that, and therefore, as an investment asset, there isn't. You're using it as a store of value rather than necessarily benefiting from market speculation.
No, so exactly. It's exactly what you have right now. It's just digital. So it's the digital dollar, digital yuan, digital euro. We're going to see that everywhere. And as I said, it's we're not opening Pandora's box here, but it's the implications are huge on how this is being done. Let's see. But it is, as Marvin said, from an investment point of view, it makes no difference whether you buy a US dollar or a digital US dollar, because there's no leverage. It's a mirror.
Okay. Well, thank you, Philip. That's
Okay,
great.
great.
And just to let everyone know that the fund is an open